Welcome back to the Home Care Strategy Lab. I'm happy to be here. I'm your host, Miriam Allred. Hope everyone else is doing good and feeling good this week. Today in the lab, I am joined by Jesse Walters, the CEO of Hillendale Home Care. Jesse, welcome, and thanks for being here.
Thanks for having me, Miriam. It's great to see you. I think it's been 2 or 3 years.
Been a minute, but here we are back together. It's good to see you as well. How are you doing? How are you feeling about everything?
Everything's a big question. I think that I try to ignore everything except for the things I can control. Families healthy. I get to work with incredibly talented people every day, and get to try to create the company that I've always wanted to work for.
Amazing. For those that don't know you, let's start with your background. Talk a little bit about your experience in home care.
So I started when I was in college. I was a caregiver in college, working with. I remember an older gentleman with Alzheimer's and a young kid with learning disabilities, and with very little direction. Reflect on that period of time as I could have been such a better caregiver to people, and then had an opportunity through a mentor of mine who had been opening up a number of home care companies in Las Vegas. And I actually dropped out of Boise State and went and lived in his garage for about 6 months to learn the home care industry. I think I was about 21 at the time, and have been in the industry, focused on it ever since. A lot of Medicaid in the early days, which was super challenging, and then moved to Walnut Creek, California, to open up a new home care location for the company, and that was where I learned how to work in the private pay market, which was trial by fire. And I felt like I was running for office for that first year, hugging, shaking hands, kissing babies. But it was a blessing, and then right around 2011, I uh, came across this fairly small unknown company called Home Care Assistance. Had the opportunity to meet with Jim and Kathy, the founders of Home Care Assistance, and joined the company and worked there for about 12 years or so, working within the Bay Area primarily, and then eventually leading the kind of Pacific Northwest through a lot of organic growth, acquisitions, de novos. It was one of the most incredible experiences in my career, and then left in 2022 after the kind of rebrand, and now they're called The Key, and had an opportunity to um, acquire Hillendale Home Care. Love
Yeah. What
to,
did you think you
yeah.
were gonna do for your career? I mean, pre that, like, caregiving experience in and around college, what did you think you were gonna be doing?
I had no idea. Sometimes I laugh. I was like the firstborn child to very young parents, and everything was an adventure because we never had a plan. Um, and so, I looked. I knew that, and my mentor said it to me best one day. He said, "Jesse, you love helping people. You're interested in exploring businesses. When you're ready, come on down." And so it was kind of that intersection of really interesting challenges or chests of business. And when you perform exceptionally well, you're actually improving uh, everybody's lives, right? Caregivers, clients, et cetera. So that's been the fuel for the last 23 years now. Is how do we get better? How do I get better? How do I support our teams to see the industry differently, or just even optimize what we're doing today?
And now you can't probably imagine it any other way. The last, 15 years, 20 years, it's like
Oh,
this
yeah.
is your life. Home care is your life, has become your identity, a big part of your identity, would you say?
I fortunately, I had, yeah, yes, in many ways, it's a part of my identity. I've had enough heartbreak over time to make sure that this identity is not the only one that I operate under. Um, and if my identity is challenging my colleagues in the industry to improve their service, right? to optimize the client experience, then that's the identity I really want.
Let's talk about acquiring Hillendale. So you said left Home Care Assistants the Key 2022, maybe took a little hiatus. I think you've told me before you were like considering retirement, your wife was working, like, maybe press pause for a minute, but then what lit you up to go out and seek out a home care company to acquire?
That's a great. I love that story. It was the first time in my life that I'd ever had both time and money. I've never had one of those two at the same right. Two at the same time. So I was really looking forward to be a semi-retired stay-at-home dad for it was May, so I was looking forward to the summer and just kind of catching my breath after a pretty significant run, a pretty significant 10-year run. We went from, I mean, over the period that I was there, we went from maybe 20-25 million a year to north of 700 million a year. And it was just this incredible experience. Um, and so I was looking to hang out with the kids. And then about 4 to 6 weeks later, a really talented woman that I absolutely adore in the industry, we'd worked together for quite a while. She called me and expressed how frustrated she was with the company that she was at the time, and said, "Listen, if you can find something to acquire, I'm in. Right? I want to be a partner, but I'm in." And she's an extremely talented sales leader, market mover, industry leader person. Right? She just I love her to death. And so that was 4 to 6 weeks after I was supposed to be semi-retired and a stay-at-home dad. Um, And there was one company, over the years that we hadn't acquired that had a fantastic reputation in the marketplace and was run by, a really thoughtful, nurse named Bridget. And so there was the one company, if I could acquire one, I was like, "Well, let's see if, what Bridget's up to." So I actually guessed her email address. I couldn't find her exact email address, and so just, guessed it, sent an email and said, "Hey, this is who I am. This is what I'm about. Love to see if you're exploring um, an exit at some point in the future." Probably a similar email that everybody gets all the time. I know I do.
Did your reputation precede you? Did she know who you were?
Interestingly, not in like a really positive way. It was there's I found in the market there's generally two types of leaders. There's the leader that if you are kind of winning, maybe kind of starting to really saturate the market. There's leaders who will assume that you're cheating and finding loopholes in the rules, and then there's people who where I try to emulate, which is like, wow, they're doing really well. Like, what is it they're doing? I want to learn, right? I think that this person has some unique view of the industry. So anyway, Bridget wasn't necessarily a fan of mine right off the bat, and as we connected for coffee a couple times, it helped. The way we translated some early things in the market was different than how she translated it, and so I was able to explain. I mean, if you think we're cheating, that was under my leadership, so that's me, right? Like that would be me. So we connected and built a really strong relationship over a handful of coffees, and I remember this very distinct meeting where, she kind of looked me straight in the eye and said, "I see what you wanna do. I do wanna sell Hillendale to you." My first thought was like, "Oh, shit, why?" Sorry.
Yeah.
Why? Oh my
Here
gosh.
we go. I'm actually doing
Yeah.
this.
Yeah, yeah, yeah. But the rest is kind of history. Within 6 months of my semi-retirement, I'd acquired Hillendale Home Care and put together. We had a number of people join the team, and we just have had a tremendous 3-year experience so far.
Oh my goodness. And the thing that you've told me, hopefully this is okay that I share publicly. One of the first things you said to me when I first met you 2 or 3 years ago, kind of at the beginning of your journey was, I want to acquire four, five, $6 million company and grow it to 100 million in 5 years. And that stuck with me. There's not many owners that say something like that. And I was like, well, here I'll be on the edge of my seat waiting to see you pull that off. And so just give kind of a quick overview. It's been what, 2 years since you actually
3 yeah,
acquired?
it's been
Three.
yeah, 3 years. This, November was our 3-year anniversary.
So just kind of quick overview. I know that's like a loaded statement, but kind of the size, shape, payers of the business when you acquired it, and then just kind of overview, like just like the trajectory, kind of like quick history of the last 3 years.
So when I acquired Hillendale, they'd had, one of their best years yet. It was about a $4 million a year revenue business, a mix of payers from, forgive me, I won't remember the name, but, like a county type program, not, unrelated to Medicaid, um, closer to like a PACE program they were a provider for, long-term care insurance and, primarily private pay. And within 6 months, we'd actually hit that $4 million revenue number, that they'd hit the year previously. And so we grew. It was pretty wild. We grew from 4 to 9 to 18 to last year about 24, 25, somewhere in there, like 24 and 23 and a half. Um, and really looked at, expanding into different markets. So we have four locations, primarily growing in, Walnut Creek, Santa Rosa, Oakland, sticking within the Bay Area, and then opening up Palo Alto. And this year, looking at additional three, four, five locations, just depending on how the world turns. Yeah, it's been and really squarely within our growth has been our focused on rates and, kind of you can't for me, I can't separate rates, and quality. I think that they go pretty in sync together, um, in our focus.
You're teeing me up for the topic, which is rates here. And I first approached you and said, "Hey, I want to talk about rates." And you're like, "Well, that sounds dry," which it is. But you're about to see, I mean, you might prove me wrong, but I think there's, like, so much more to rates than one might think, even private pay rates, and I talk to companies that, they service all private pay, but they've got, like, a massive spectrum of rates, and so you're in California, which is already kind of like a differentiator in and of itself, but I wanna hear you said Hillendale was already doing well when you came in, clearly they had things going right. I'm curious what their place in the market was and then how that's evolved. Were they kind of premium provider charging the most and providing the best care? Were they kind of like mid-market? Were they specialty care provider? Like there's a few different like key differentiators and I'm curious when you acquired Hillendale, what was their unique differentiator at that time?
They Hillendale was interesting, and I see this in a number of situations that I've come across. And Hillendale was they were a smaller company and really nervous about, getting too big. They didn't want to dilute their care quality as they grew or as they added clients. Their rates were, probably in the like top 70, 75 percentile. So it was, they're like upper middle market. And they had, like that pace type, contract in place that actually had a pretty significant, hourly, rate tied to it, but it was really short hours. So it did, sometimes rates are designed to eliminate stress or reduce stress. And I found that even with the rates where they were, it still increased stress quite a bit because caregivers don't want to go anywhere for 2 hours, particularly in the Bay Area. So our first step, if your question is what do we look like today? Our first step, we increased our rates pretty significantly. I was looking at bringing on some very, very talented people to the team, and I knew that our rates were a signal to, the talent in the marketplace on who's going to join the team, talking managers, staffing managers, client care managers, sales teams. And then caregivers. Like, are caregivers going to do better with us or the same or less, right? So we immediately raised rates. We fairly quickly, I would say within about 3 months, uh, terminated the PACE contract, but connected the PACE program with a company in our area that kind of specializes in 1 to 2 hour shifts, and I think they're doing really great with that,
Mm.
which we're happy to hear. So that was kind of the first couple things that I did.
Okay, yeah, a couple of follow-up questions that so when you came in and you say their rates were maybe like upper mid-market, did the team in place know that? Would they have been able to identify like, "Hey, here's where we're at in the market," or was that you having come from outside experience perspective coming in and saying like, "Here, hey, here's where we sit?" Because I asked that. I'm curious if companies know their place in the market as well as they think they may know their place in the market.
I think there's a lot of fear connected to rates. If we raise rates, nobody's going to knock on our door, right? And you can find in every circumstance companies that are going to charge less than you, right? That could be 1099 contract agencies. In my previous experience, where I tried to be the lowest cost provider in the same market, I was very much at the bottom of the market, and I could still find people that were less than me, charging less than me, right? So there's you can always race to the bottom. So the team in place um, felt confident about where their rates were. They weren't pushing the ceiling. And they were comfortably in the middle, the upper middle. But I also find that many teams aren't actually exploring who's charging what in their marketplace, right? So every 6 months for us, we're calling and kind of shock calling and trying to understand what rates are the different companies are charging or paying caregivers to make sure we stay positioned where we want to be in the marketplace. So
And
it's you can know for a minute, but that changes tomorrow. Are you updating your information?
And that's really good perspective because that's interesting to hear you say you thought you were the lowest, but there's always someone lower. And I think the same can be said about the highest. I think a lot of providers think, oh, yeah, we're the premium provider in our market. That could be the case for like a month, a quarter, but very quickly there's a lot of fluctuation, which then begs the question. So you step in, you kind of identify where the rates are. You say over 3 months or so, you know intentionally you wanna raise those rates. The thing that you just said was the biggest factor was actually, like, leadership costs, like, paying the caregivers more and then actually bringing on leaders. Those are the key things you were factoring into raising your rates. I think that's really interesting. There's a lot of reason to raise rates, but yours was, "Hey, we need to grow this team, sophisticate this team, and we need to bring in more money to be able to do so." Just explain that thinking a little bit more.
In my previous experience at home care assistants, we had tremendous growth. I felt so blessed with the leaders that I had the opportunity to work with, right? Um, because I wasn't involved in their growth. I was kind of their board member. I was supporting them. I would, as they had challenges, I would come in and support them. But on the good days when they're crushing it, I was fairly irrelevant as a leader, right? They're doing well. They don't need anything. And so I found that I was able to grow significantly more if I could have really be surrounded by really talented people who are passionate about their specific market or about operations in general or sales. And those folks want to be paid well. And if I can pay them more than they will be paid anywhere else, then they'll actually be here long enough to see that what our mission is and really build loyalty and kind of continuity for the business. So yeah, it was 100%. Um, I want to be surrounded by extremely talented people.
And the same could probably be said for the caregivers. We talk about kinda like leadership, office team, those key roles, but then also the caregivers. Early days, Hillendale, were what was kind of like the margin or the ratio of wage to rate, and were you concerned about that, and did you wanna quickly also up the rates to be able to pay more, or where was that at?
That's a great question. The margins. Today we're running like a 50%, give or take, right? 49.5 to 50.5% um, caregiver margin, probably boiling down to like all in 43.2 is our gross. Uh, Looking at the company previously, it was closer to like 35 to 37%. So they were actually paying their caregivers a pretty decent amount, but then also not charging that much for the service that they were providing. So they weren't kind of lifting that ceiling on the clients. And so we changed that fairly quickly. And the team that I brought on board initially, um, they didn't want to sell a middle market service. They wanted to sell a high end, high value service because we generally operate with much lower client caregiver ratios, right? We want two managers for every 20 to 25 clients to really provide that value that we're looking at. So the rate has everything to do with our ability to provide um, a really high level care.
Okay. Let's talk about the client perspective here. When you're talking to these clients, these families, even referral sources, is there more of a price sensitive group that you're talking to or a care sensitive group that you're talking to? Does that make sense? You know, when you think of your population, are people more price driven or care driven or somewhere in the middle?
I think to some degree, everybody's price sensitive because nobody wants to spend more than they have to. And oftentimes in our industry, this isn't the fifth company that they've worked with, right? This is like the first time they're entering into our service. We've had a major event change and they're geez, I have to have a caregiver. This is terrible. Now I have to spend six, seven, $8,000 a month. So our goal is to educate them in a way that most people are price sensitive. And what I've seen over working with thousands of clients, what they want is a continuity of care, a relationship with the caregiver, trust that the caregiver will be there, trust in the care team that's going to be supporting them. And I've seen that 100% of the time. 99.9% of the time. I've had clients who are like, I don't care if it's a revolving door, send a new person every week. And that was actually not a client we wanted to work with. So yeah, everybody's price sensitive, but when we get down to it, what everybody wants is a relationship. They want a relationship with the company, with the caregiver. Um,
The
yeah.
tricky thing is proving that though, proving that upfront. When it's in that kind of like price negotiation stage, they may have shopped around. Likely they've talked to one or two other companies and they say, oh, wow, you guys really are a premium rate. And then you come in educating, here's why we're a premium rate. But it's hard to convince them of that upfront. Or do you find that it's tough to convince them of that upfront without proving yourself over 30, 60, 90 days with the actual care?
We work pretty heavily in uh, sales, like referral relationships, right? And so a lot of the when you work in the referral space, client referral space, a lot of the relationship has been built with that referral partner, and so you actually get to um, you get kind of a head start on the trust with the client because they have the trust with this discharge planner, and so we can. I don't know what the term is, but we get some of the goodwill off of that trust that's been built, and then we need to prove it, right? um, Marketing leads, digital advertising leads. That's where we have to, over a much longer period of time, build that relationship with that individual consumer, that individual client, to then build the trust that we can be the right care provider. So we try to have we have a lot of really solid indicators in the marketplace, best of home care in our various markets and in a number of other ways to demonstrate without us saying it, right? That we're a pretty high level provider. Uh, Far from perfect. We make mistakes. We're human. There's a lot of humans in this business, but we're going to show up.
And I think what you've done right, arguably so, is setting that like ICP, your ideal client profile. Internally, you know that, your referral partners know that, you know exactly what you're after. And the companies that I talk to that are the most successful, they're locked in on that ICP and know who to say yes to and they know who to say no to. And that alone, earlier you talked about like headaches around high rates, low rates, flux. It's like you have to know who your target is and stick to your guns. And similarly with rates, I wanna ask you about fluctuation in your rates. You know, when I say, you know, "What is your rate?" Like, there's a standard rate, like, you know what your rate is. Are you flexible or is there nuance to rate? You know, is there an edge case when a client or a family comes to you and you make exceptions? Like, what have you learned in regard to making exceptions when it comes to rate versus, you know, like, you put the hammer down and there's no edge cases when it comes to fluctuation in your rates?
There's fluctuation in that our rates can go up based on geography, right? Based on how challenging a situation will be to staff, right? To get one, two, three caregivers out to support a client that's a pretty decent distance from us. Usually, we'll look for a trusted provider in that market to connect the client to. But if they're right on the edge, um, sometimes we can service them. It depends on the hours and the rates. So we can go up with like discounting rates. I don't discount rates for my family, right? I don't discount rates for anybody only because um, our team. If you discount a rate, in my mind, you become deprioritized with the experience because the caregivers, are you going to take it from the caregivers? Are you going to take it from the margin? If you take it from the caregivers, you're kind of disenfranchising a caregiver to provide exceptional care in this situation. And if you take it from the staffing team or the team that's working on it, now you're hurting their margin and their ability to expand and add to the team. If anything, with my closest friends and family, I've literally had a conversation that um, pay more. You know, like our rates are designed for the average consumer, but if you want to have a really great experience, add $5 an hour to the rate, right? You'll become a client that caregivers will flock to and want to stay at versus many of the other clients in the marketplace. So I'm very I've had a lot of internal debate and dialogue with some pretty high level with myself, but then also these conversations with some pretty high level partnerships that we've had in the past. Um, and this is exactly what I've said. I want your buildings to be priority.
Mm. And
I
I'm
want them to
guessing
get the best caregivers. Sorry.
you're speaking from experience, whereas earlier days you said you were kinda like low cost leader,
Yeah,
you know, you
yeah,
were
yeah.
you were chasing racing to the bottom. I'd imagine in that position, you were willing to discount rates, you were willing to go down out of necessity, and so I'm guessing where you're at today is based off of, like, bad firsthand experience earlier on. Is that fair to say?
I think today trying to live in a space of abundance, right? And we're the right provider for the clients that trust we can do what we can do, right? And how do we communicate that better? Earlier on in my career, it was I still wake up with like cold sweats and nightmares from 20 years ago, trying to be the lowest cost provider, and we hit really great revenue numbers, but I had to work 24 hours a day to maintain that and question why this caregiver can't meet the commitments that I'm making to the clients when I'm paying this caregiver 40% less than anybody else in the market. It was horrible. It was really challenging. Wouldn't trade it for anything. Wouldn't go back to that time for anything.
Yeah, and these are good lessons for different providers to hear because everyone is at a different place in their market and some haven't
Hmm.
lived through this experience like you have. So that's why I asked those questions. A minute ago you said so in your territory is getting bigger, you know, by the day. And
Yeah.
so you have different markets, different challenges, different needs. You said there's a couple of things that you factor into increasing your rates, one being distance, one being like number of caregivers needed in the home, hours. Talk about I mean, I just kinda rallied off those 3. Are there more things that you factor into increasing the rates? Like, what are kind of the key components of, "Okay, you check these boxes, this warrants a rate increase?"
Coming from a staffing background, which was really my second career in home care, right? After caregiver, I was staffing for 3, 4 years, and then moving into a more client-facing role, sales and client care. I could look at a client situation and have a good sense of what it will take to staff this client well, right? And part of it could be the height of the client, the weight of the client, the distance driving through mountains to find this client, the environment of the client. It may not be a great environment to provide care in. Um, and so I would ask myself, and I would pull in my staffing team and say, listen, what rate do I need to charge for this to be easier to staff? Not completely easy, but like much easier. Defining easier is can I line up 3, 4, 5 caregivers behind this just in case the first one doesn't work out? And so that's where I'm able to move the floor up and at our best, and I don't think we've fully unlocked our capacity to do this individually. Um, but at our best, our client care managers are asking that question. Can I provide this care at our base rate? Or do I need to add additional dollars per hour to make sure that we can get a really solid caregiver who can handle this unique, challenging situation? We need a caregiver that can drive at night and work a night shift with a client who's up uh, consistently the entire time. So that's the kind of the algorithm that we have is what does it take to get this client the care that they need?
And you just said something interesting, like, you haven't, like, hit your stride yet in this regard. I'm curious what you mean by that. Is it a matter of training and, like, more experience for your leadership team making these decisions? Or is it, like, penetration, like, knowing your roster better to know what your current team is capable of? Or how do you, like, hit your stride in this regard?
This is I think it's one of the challenges of scale. If I'm the client care manager going out to this situation, I can think on my feet. I can look at a situation and not commit, but communicate with my team and then recommit to the client. Right. So there's all this experience in my brain that's like creating this thing that I can do in this one circumstance. It's going to work out. But you can't scale off of my experience. It's how do you create a system that you can replicate to increase rates appropriately in situations and then communicate the why, right? We oftentimes fail at communicating the why and just say, nope, your rate's this, right? Well, there's a reason. Explain the reason. We can be transparent, right? We can people want to know. Clients want to know. Uh, I've had conversations with clients and explained to them what they really want, which is continuity of care. They want a relationship with the caregiver, and all of a sudden, there's kind of an aha moment, right? So if we look at have we created the algorithm at Hillendale to know exactly which situations should increase the rate, and then empowered our teams to charge the appropriate rate? We've empowered the team to do it, and we still need to give them the algorithm or the tools of something we're still trying to work through ourselves at the leadership level.
Yeah, like trying to put a formula to it so that the whole team can follow the formula. But I guess, do you think it can become formulaic or there is just so many factors in one case? Every single client and their circumstances warrant a unique set of parameters to hit the mark for that client. We talk about scale and it's like, yeah, we want to create processes and formulas that standardize our processes so that we can scale.
Right.
But can that be done? There's only so far we can, like, take that, I think, in home care because it's people taking care of people.
I would say so. I've been in the industry 25 years, something like that, and I'm still very much in it and very much engaged because I'm optimistic. I don't think the job's done, right? I don't think our work is done. So if you ask me, can it be done? Like without hesitation, I'm like, yeah, of course. If you ask me how it can be done without hesitation, I'm like, no clue. Or, you know, thinking about it. How do we communicate it? How do we learn it? It's adapting to situations. Humans are all different. Situations are often very similar, right? And it's what does it find the signal in the noise, right? So I do think it would be done, but I'm a terrible optimist.
But good answer, because I also think, like, there has to be to scale a home care company to 100 million, there has to be formulas. There have to be strategies. That's why a minute ago, I think of it like check boxes. Okay, for this client to warrant this increased rate, there's like a set of 5 criteria. If they hit 4 of the 5, increased rate. If you know what I mean? Like, we have to break it down.
Yeah, you look at senior living and right, you move in on your base rate, and then based on these 5 to 7 ADLs or IADLs, they'll increase or add cost to that. So it's been done in apartment, group housing environments, which are, I feel like it's static to some degree in where they're going. Um, but we're also like this isn't like a burning topic in my mind because I'm talking about 10% of our clients, right? Uh, 12, like not a huge percentage. The majority of people fall within a range that we can effectively provide really, really solid care, right? And it's those edge cases that because we want to solve their needs, we want to support them, and more often than not in those situations, we go in at the average market rate and we actually perform really poorly, right? And if we'd gone in $4 or $5 more an hour, we could probably do much better, right? We
Mhm.
could perform much better. But it can be. Listen, you're talking with clients and you say our average market rates are this, but for you, I'm going $5 more an hour, and so it's having the confidence and being empowered to say why, right, and getting to that emotional why, not the um, statistical analysis of caregiver wages and reasons, but really what's at the heart of the issue, which I find a lot of, believe it or not, like a lot of people in our business have a hard time getting to that emotional place. It can hurt. It can be scary. Um, but that's where like the relationships are built.
Yeah, when you stick to, like, the financial piece, it just feels very cold and very rigid, and people wanna understand emotionally, psychologically, what's behind that
Yeah.
and what type of care they're going to be getting that warrants that increased rate. A couple of kinda, like, nuts and bolts questions. So you said 3 years ago, you came in and you raised the rates. How many times have you raised your rates since then? In the last 3 years, how many times would you say you formally, like, raised your rates?
We've done it twice so far. Well, so we've done it one other time in the market. We're still, I find that I'm seeing rates pull back a little bit. So we're still the highest in the market. But I'm not seeing it as, there was a time I think especially during COVID where everybody was just ratcheting up their rates and their prices, and we're seeing a number of our uh, uh, fellow home care companies pulling back a little bit in the market.
Is this the first time you've ever seen it go backwards in all your experience?
Ooh, yeah, yeah, I would say so. I mean, it's been a big run since 2008, right? So um,
And
we've gone up.
we've all lived in this world the last 5 years, like, cost of living, the cost of every single thing has gone up, so naturally, home care just followed suit, but that's interesting to hear you say that people are actually walking it back.
A little bit. I mean, for me, I'm seeing private equity jump into this market. Like crazy, right? And so I tend to see rate increase with oftentimes with PE coming in, and then depending on what's happening in the market, they might pull back a little bit and view more of a volume play. So charging a lot is scary in general, right? It's like discomforting. You're kind of sticking your head out, uh, and so yeah, I've seen it. I've been tempted many times throughout my years to pull back.
Okay. So twice in the last 3 years is interesting. Is that what you would have expected? Or I guess in all of your 20 years in home care, how often are you typically raising rates? How often are you considering it, thinking about it? Like, earlier in the conversation, we were talking about, like, rates can change on a dime, and so you have to keep a finger on the pulse. Doesn't mean you have to change your rates all the time, even quarterly
Right.
or semi-annually, but how often are you thinking about it? And then how often have you historically changed your rates?
We've I think historically, probably on an annual basis, we've gone up maybe 50 cents to a dollar an hour. Um, my first rate change was something like 5 to $10 an hour. So, um, so we're comfortable. We're sitting very comfortably at kind of the higher end of the market. But I look at it in market saturation, right? Are we a well-known player in the market, and do we have a pretty solid like referral volume or referral base built out? If we don't, we might pull rates down to the like upper quartile. If we do, then we're looking at how do we stand out as a premium provider in that marketplace. So the pressure exists every day. Y'all get a call from my leaders, and hey, this company just beat us out on price. They were $3 less per hour. Um, but then I'm like, what about those other like 47 clients that we started? Like, so it can be, there's pressure to not want to lose any clients or opportunities to serve. Um, but the reality is we're not right for everyone. Uh, we want to consistently be more right for more people, but we can't be.
Okay. And it sounds like when you made that initial increase, it was a big increase, like an
Yeah, it's huge.
unconventional increase. When you made your second increase, was it another sizable increase, or was it more like a regular, like, incremental, like, marginal increase?
Yeah, it was. Let me go back in time. It was like a $2 increase. So still pretty sizable to what I've seen in the past. But that was more on the floor. We have more of a pricing band, and so that was increasing the floor $2 an hour to make sure that uh, we feel like competitive in the market.
Okay, because I ask, what is the best way to do this? In my mind, like most products, goods that we typically buy, there's just a really steady marginal increase that you almost don't even recognize. Is that the approach to take in home care, or is there a different approach? Or there's too many factors?
Well, we're not. If what you're asking is are we raising prices without n- launching a big raising price campaign? Yeah, so we're raising prices on or our costs basically for new clients coming in the door. So our quotes would go up a dollar an hour, $2 an hour, um, and there's no announcement. There's no real discussion about it out
How
in the
often
market.
is that happening then?
That's the rate I'm talking about. Um, so that was twice. The first time was like close to $10 an hour. And the second time was like $2 an hour, just in our new client acquisition or new client pipeline.
Okay, but what you're saying is every time you bring on a new client, there's an opportunity to like adjust a rate. They're a net new client. They don't know what your rate was 6 months ago. They don't know what it was yesterday. Like every time you bring in a new client, it's like the rate is subject to negotiation. And so I guess that's where I'm asking, like, how do you make that decision? Like, oh, it's been 3 months, we're at $45 an hour. Like, why not go to $46 an hour because we can?
Ugh. Yeah, I have those thoughts as well. Where is the ceiling? I think it's we try to we try not to have too many changes, rate changes, whatever it might be. One, um, it can be confusing to the teams, right? Like, I don't want to think about rates. I want to think about serving this client, and these are the rates, right? So I don't want to make too many changes where everybody's having to remember what's our rate of the day, right? What's our
Yeah.
soup du jour? Um, and it is, I've seen, I think that, I don't think we've seen the ceiling on where rates can be in our industry. I think we're probably close in many ways. We're not seeing caregiver wages increase significantly, which is one of our largest, significant cost of every rate. And that was where in the past we were moving a little bit quicker, a little bit more often on rate increases. As like when I started 20 years ago, caregiver wages were, was it $10 an hour maybe when I started, $10 an hour, and today it's 18 and some change, or 17 and some change. So um, we've had to adjust pretty quickly to about 5 to 7 years of pretty significant caregiver minimum wage increases.
Mm. Yeah, and I think what you said is interesting. Like we don't know what the ceiling is for home care rates. Yes, we saw a huge increase recently, but then you said, yeah, like fluctuation of private equity. There's all these like kind of outside forces making their way in, and that affects wage and rate. And so we don't know. But I guess, yeah, that's why I ask you, like, every client that comes in, it's like almost do you just keep inching forward until, like you said, your team calls you the other day and says, hey, we just lost this case due to a $3 difference. Is, if enough of that happens, you start to question, okay, have we inched up too high too fast? Do we need to walk it back, or do we hold here for 6 months, or hold here for a month or 3 months and see what happens? Like we don't know what we don't know.
Well, there's reputation also, right? And so everything comes back to our referral partners, or the marketplace reputation, right? So we try to be very intentional and very purposeful on broad rate increases. There's individual situations you can generally justify why the caregiver should be paid more to provide care to this client, right? And then the client rate will go up, sometimes significantly depending on the needs. But we're really trying to balance that, being a high end service provider with, not gouging clients in the marketplace, and making sure that we're doing things, we're operating as fairly as possible, um, with our people in the market, with our clients in the market.
How do you think about like rates in conjunction to revenue? Because in my like kind of naive mind, it's like higher rates, higher revenue, but they're not necessarily parallel. So I'm curious how you think about it right now at Hillendale. Like increased rates equals increased revenue, or are you most focused on revenue or rates or margin? What are you thinking about consistently as a leader?
Well, I think rates often equal stress to me. And so if you look at the stress or the burden that you're putting on the team to provide service to, X number of clients, you can actually reduce that burden and reduce that stress significantly by who you say no to, or by how you structure your rates in the marketplace. And so I've seen companies that, have grown very quickly based on the lowest, rates in the marketplace. But then there's usually a tipping point or a breaking point to where, the team that's actually servicing those clients, the staffing managers behind the scenes, or the care coordinators, um, they burn out. They fall off. And that turnover to me is the biggest killer of expanding a business, is turnover. And so there's rates to me just signal so much. It signals to me who you're looking to attract to your team from a leadership perspective, which caregivers you want to be working with in the marketplace, which caregivers you're attracting, and then how many clients do you want? 1,000 2-hour shift clients, or do you want 50 40-hour a week plus clients? Because one is much easier to service than the other. Um, so rates to me are the foundation of our mission. Is like, okay, what can we do well, and let's go do it.
The other interesting thing that you said is just like rates relevance to stress levels. I think a lot of owners that would resonate with them is, we're mid-market or we're lower mid-market and their stress is extremely high. The turnover is extremely high. The stress is extremely high. They're losing office staff over X period of time because the stress is so high. And you could correlate it back to the rates. I think that's really interesting.
Yeah, it's one of the most power. I didn't learn this for 15 years, but there's two ways to gain what's the word I'm looking for? Like positional power or just personal power, right? And it's what do you choose to say yes to, and more importantly, what do you choose to say no to? And I found no to be a much more kind of signal of power and boundaries is what can I say no to because I realized that this is kind of the long tail of stress. I've been in such challenging situations of growing a company, working all the time, and realizing that um, we're actually not growing that much. We're adding a bunch of new clients, but we're not seeing significant growth. And I feel a ton of stress within my body, emotional stress, like spiritual stress, all of that. And I'm really trying to hang out for the long haul. I'm really trying to be in this for a long period of time. So how do I protect myself first, which means I have to protect my team, which means I have to protect my caregivers, and then I need to protect the clients we choose to serve.
Can you go one layer deeper and reflect on this past year, 2025? What are some hard things that you had to say no to as a leader? I'm putting you on the spot with that. What are some maybe specific pointed things that were hard for you to say no to, but you ultimately did and there was a payout?
I think that it was more of a where I choose to spend my time and focus. There's a number of opportunities, especially as CEO, to attend certain events or to meet certain people or to take certain meetings. And as somebody who generally, I love working with people, et cetera, et cetera. Um, I've really had to get comfortable with saying no, like now is not the time. We've had some really great offers for investment, et cetera. And it's saying, does this company or does this align with what we're trying to do and with our vision? Um, there's a number of partnerships that we've looked at that just would be a distraction for us.
And it feels lonely at the top. You have a really great network. It sounds like mentors, peers, industry folks that you know, but these are weighty decisions. Someone reaches out to you, like you're at the top and you think, "Wow, I'm the one that gets to say yes or no to these very large opportunities, partners, etc." What helps you stay grounded? Who do you turn to? What is kind of like your guiding light to make really hard decisions as a CEO?
That's a great question. My wife helps me stay grounded and reminds me that I'm not as special as I would like to think I am. Um, but it's there's a lot of people that are a lot smarter than me, and if I can learn a little bit from each person, I have a really great team in Hillendale that I really don't want to be the sole decision maker. I want to understand how to look at this from an HR perspective, or how to look at this from a finance perspective, or an operations perspective, or data, analytics perspective, and then make the best decision that I can. I joined YPO this year, which was great. A place of other CEOs who are kind of going through extremely challenging situations. And actually, I attended this retreat in December called Hoffman to really start to tap into like my emotional well being and how I can show up better for myself, for my family, and for my organization, because it's extremely lonely at the top, and it's also um, I'm responsible for a lot of lives, a lot of paychecks, a lot of future home purchases, life moments that are really impactful. And I've really recognized this year that it's important for me to recognize what I say no to, but then when I say yes, be fully invested in the yes.
Thank you for sharing. You're no stranger to how difficult this industry really is. Even for someone like you to be sitting in this position of success, I would call it, it doesn't mean it's easy. It doesn't mean you don't have stress and sleepless nights and your body and your mind are taking the toll of what you've
Yeah.
done. And so, I ask these questions. I think a lot of people may look at you and think like, "Oh, how much stress could he really have at like that level of success?" But that's not the case.
Yeah, if anything, it's more. It compounds, right? I thought if we could get to 25 million, we'd have it all figured out. And I'm like, okay, I'm just totally wrong. We're never going to have this figured out. So what can we be comfortable with, and how do we continue to be curious?
I love that. I love that. That's the
Yeah,
honest truth. That is the honest truth. We all have our sights set on our next milestone, and we have this expectation of what that milestone will equate to, but
yeah.
oftentimes that's not the case.
It's empty. Yeah,
And
yeah. What is the meaning we assign to it?
yeah, and that's what keeps us on our toes. That's what keeps life interesting is, there's that next mountain to climb and we're always chasing. Maybe just last question, open-ended. I always like to ask this, start of a new year, what's on your mind? What are kind of hopes, dreams, goals, ambitions for this year? Is it kind of stay the course? Is it acquisition? Is it new partners? What do you have your sights set on this year?
It's a couple areas of focus that I'm looking at is one, we have an extremely talented leadership team that basically we formed, brought on a couple key players within the last 90 days. The chief people officer, who's extremely talented, our operations leader, who's extremely experienced and talented, joins our existing team. So one of the areas that I'm really focused on is how do I contribute to the mission better? Because I've hired people to do a lot of the activity that kept me busy or kept me focused. So I've had a lot of people. I have a great coach that I work with who's like, Jesse, what are you going to do? Because you have a hard time sitting still, right? And so, do I go in and make a mess, or do I let the people that I brought onto the team execute and do really well? So some of it's figuring out how I can add the most value to the organization, um, this year and into the next 3 to 5 years. The other our kind of practical focus or game plan focus is opening up additional de novos, in like 4 or 5 more markets this year. Looking at an acquisition or two as they come up. We've been really fortunate to have a few come our direction, so working on financing. Um, and in kind of the underlying tension, I would say, that exists in me constantly is just how do I help create an organization that's somewhere I've always wanted to be, right? I have this unique opportunity. I've been in the industry, worked for so many people, really talented CEOs in their own rights, but for me, kind of missing different parts, and like, how do I create something that is a place that I've always been looking for myself? So that's what keeps me up at night. Is am I doing enough to support the organization and the people?
Well, I'll check back in because I think how do you become a CEO that embodies the mission of a company? Like, there's no talk about blueprints and formulas. I don't know that there's one for that. It's quite literally like a process. It's like an
Hmm.
evolution as an individual to become what the organization needs you to become at this point in time. And so I imagine, yeah, it'll be a lot of like self reflection, a lot of like
Yeah.
personal growth this year to level yourself up in the way that the organization and the people need you.
Yeah. Yep. I agree. No, there's no charted course, right? It's not drive 1 mile, turn left. It's like, okay, what? Let me talk to people. Let me explore. Let me be curious.
And
And let me
become
find a way
yeah,
to add
become
value.
something
Yeah.
become something that you haven't otherwise been at this point in time. So, Jesse, this has been awesome. I know I'm kinda, like,
Yeah,
taking
this
us
is
on a
great.
different course here to end the
Yeah.
conversation, but I love when you lead in, like, these questions are getting you thinking and you're just sharing like very transparently off the cuff, which I think you thrive in that environment. So thank you for bearing with me. This conversation was kind of last minute. I've thrown a lot at you, but I love just how you've like calculated responses right now in real time based off all of your experience, but also like where you're at right now in this moment. You've shared just like honest, raw thoughts and feelings. And so I really appreciate it. So thanks for joining me here in the
Yeah.
lab.
Yeah, this was great. This was great. Thank you so much, Miriam.